Oh man, so Corsair is down around 6% in the pre-market after announcing a downward revision to their guidance in some preliminary Q3 readings. What does this mean for Corsair? As you guys know, I have a decent sized position of Corsair in my portfolio. Will I be selling? What's my plan? You guys know I'm a big fan of Corsair. I've got their keyboard right here. I've got the Stream Deck here as well. What does that mean? Let's take a look at what they shared and what it means overall for Corsair. So before we begin, I want to quote you directly from Andy Paul, the CEO at Corsair. This is what he said in his statement yesterday. We continue to see 2021 as a strong growth year over the exceptional results from 2020 and building on the acceleration of gamers and streamers buying gear for the first time or upgrading faster than in the past. We are several years ahead of our growth expectations before our IPO in 2020, and we believe that this is setting a new base for us to grow on. Despite this backdrop of growth, we believe that our 2021 net revenue has been held back by at least 10% by global logistics and supply chain issues, especially by the lack of affordable GPUs in the retail channel. After a slower start to the third quarter of 2021, we have seen a return to the more typical seasonal ordering, with September being the strongest month in the quarter. Okay, so that's what they said. Now let's break this down. Well, what they said was, look, we're going to revise net revenue for Q3 to 391 million, okay? And they're going to revise their 2021 net revenue to the range of 1.825 billion, let's just call it 1.8 billion for simplicity, to 1.925. Again, call it 1.9, okay? So they're sharing new guidance to say it's going to be 1.8 to 1.9 billion in revenue for 2021. Now, analysts were expecting 2.05 billion. So they were expecting 2 billion, just shy over the 2 billion mark for the full year. So this is obviously disappointing people. The stock is trading 6% down. Now, should we be panicking? Is this bad for Corsair, and do we need to get out of this? Are they struggling to grow? Are they a bad stock now suddenly? What is going on? Let me bring you up to date with where we're at. So in Q1, they did 529 million in sales. That puts you at a run rate. And by the way, Q1 is not their strongest quarter. Yeah, their strongest quarter seasonally is Q4. So Q1, they came in at 529 million. And bear in mind, there was still a lot of COVID situation going on there, and that's what has led people to believe that this may be a stay-at-home play. And I'm going to come on to this very shortly. So Q1, 529 million. Q2, that fell to 473 million. Q3, 391 million. So total from Q1 to Q3 is looking at 1.4 billion, okay? That would have to leave them 600 million in Q4 in order to hit the analyst estimates of 2 billion, but just 400 million if they want to hit their estimates now of 1.8 billion for Corsair. Okay, now the CEO has announced that they're going to be reporting earnings on November the 2nd. So they're going to share their Q3 earnings. And remember from the quote what I said, this is a macro issue, right? He's struggling to find GPUs which are affordable, and he feels their revenue has been held back by 10% by global logistics. Corsair are not the only one struggling here. We've covered Ford, their output, GM, their output fell by 30% in the quarter. The only company which I've seen really tear through this in the manufacturing space is Tesla, right? I made a separate video on how Tesla were able to navigate that, and they solved it through software, not through hardware. So they're the exception to the rule. Everybody else is struggling, right? iPhones, cutting iPhone 13 production. Have we ever heard of that before, right? Tim Cook is the GOAT, right? At operational excellence. And he's struggling with this, right? This is a global issue. It's a macro challenge. And we know this is going to be the case. And I've been warning about this for a long time. You guys know that coming into this earnings season, I said specifically, we need to listen to these earnings calls for CEOs mentioning supply chain shortages, right? Because politicians, the Fed officials want us to believe that these supply chain issues are going to be gone. I'm seeing evidence that this could continue. I've said it from day one, throughout 2022 and even 2023, right? So these supply chain issues are here to stay. I want to hear more anecdotes like this because I'm having a feeling we're going to hear more of these kind of stories. And Corsair is just one of those victims of this global chip crisis at the moment and supply chain blockages. It's bound to have an effect when you've got 80 plus ships stuck in the port of LA, right? This is bound to have an effect. And we've covered that on numerous videos. Now, let's come on to what are we doing now, right? Like, what's the plan with Corsair? So we can see, let's see if we can get the chart up. Right, so this is the Corsair chart here, and you can see we've bounced twice off of this level at about 25.18 level, kind of is the bottom here on the Corsair price. And to be honest, it's taken a bit of a whacking from the highs here of 48. Now, what is the reason behind this? Well, one of the phenomena we've been hearing is that Corsair is a stay-at-home play. Now, for whatever reason, people are deeming this as one of those kind of stocks where people were only using it because of COVID. I think that's completely wrong as far as I'm concerned. I'm a user of Elgato products, of Corsair products. I've got the keyboard here, I've got the Stream Deck here, and people, I know that the trend is that people are becoming more and more aware of Corsair products, not because they're staying at home, but for their day-to-day. Working from home has increased. I know a lot of people that are now looking into mechanical keyboards, looking into the webcams that Corsair do, looking into the Elgato lights. Like, this is becoming a trend. I don't think this is going to dissipate by the economy's opening up. I think people have misunderstood. Gamers will game, regardless of if it's a stay-at-home or not stay-at-home. The kind of people buying Elgato products are not those that just happen to game, casually during COVID, right? I don't consider myself a real gamer. I don't game at all, actually. And during COVID, I didn't find myself buying Corsair products because of casual gaming. That's not how it works. People who are buying Corsair products are those that want the best quality of that thing. They want the best keyboard. They want the best of each product, and they're willing to pay the higher amount, right? That's how it works, and it will continue to work like that for Corsair. Now, coming on to buying Corsair, my cost base is nice and low on Corsair. I've been taking the opportunities in the charts to be picking up Corsair at sensible levels here on these dips, right? I wasn't chasing any of this in the 30s. Anything with a 2 in front, I'm happy buying Corsair at, because for me, they're fundamentally undervalued. And I mean, look at it. The price to earnings ratio is 16.7, right? Times. Their forward P ratio is at 15 times. Their price to sales is 1.2 times, guys. And so the market cap is sitting at about, what is their latest market cap? Let's check. Their latest market cap is coming at 2.5 billion, right? When I had it was 2.4, it's gone to 2.5 billion. Okay, so what does that mean, right? 2.5 billion. For me, Corsair should be at the very least about 5 billion right now. Okay, 5 billion right now would make them 2 times sales, thereabouts, 2 times sales, 2.3 times sales. And for me, that would bring Corsair's price to 45, 50 range. And that is a sensible price now, today, of Corsair. I think they have so much growth ahead of them. You've got to remember, they're far ahead of their expectations pre-IPO. It was kind of their fault that they ran ahead, right? And I'm going to come back to this because Q1, they raised their guidance from the 1.8 to 1.9 billion range. It was started off at 1.8, 1.9 billion range for the year. They revised it because they were doing so well to 1.9 to 2.1 billion, right? Because Q1 was so strong out of the blocks. They did $500 million in sales in Q1. They thought, okay, let's revise guidance. This is where they showed a little bit of an experience because they're a new company, right? They're a new company in the public markets. In Q2, they then maintained that guidance, but then in Q3, which is what we're getting now, they've had to revise it back to 1.8. So they're going to learn from this in terms of, just because you kind of beat your guidance a little bit, don't always be in such a hurry to raise guidance. Because yes, it can be good for the stock price to raise guidance, but then if you have to lower it later on, you're going to get smacked twice as hard in the stock market. So I think Corsair's got a little bit of maturing to do there in terms of governance, in terms of how they're operating as a public company, but nothing has changed fundamentally. They still own Elgato, they own SCUF, which are the custom controllers, they own Origin PC, so they can build custom PCs. It's a fundamentally undervalued company. I don't think Wall Street and institutional investors have cottoned onto this yet. I can see it from the roots of the community I'm in and people talking about it, influencers talking about Elgato products. You're seeing the sponsorships, you're seeing the appeal and the allure of the brand. They're really building an impressive brand. I think they're just going to move from strength to strength. And I think, look, let's summarize this. For me, Corsair is still a very strong company. They've got a macro headwind in terms of the global supply chain shortages that's affecting a lot of companies. So we can't say that's just a Corsair related issue. They've still got their seasonally strong quarters to come. So this Q4 data is going to be really important, which we probably won't hear until early next year, but we will see how September was because September is supposed to be strong for them as well. They still did 1.4 billion in sales Q1 to Q3. They're debt free, have a strong cash position, and and they're growing fast, right? And it's a super cheap valuation. You're not going to get a similar product like this so cheap. I mean, just go look at Logitech and other similar types of companies, and I don't think they have the attraction or appeal that a company like Corsair has. So overall, guys, to summarize, what am I doing here? I'm continuing to hold my position on Corsair. I'm not in any panic at all to sell my Corsair. Fundamentally, for me, nothing has changed. There's been a bit of a seesaw in terms of them uplifting guidance and then revising it down. Does it justify 6% down in the stock? No. I'll continue to average down, and these will continue to be opportunities for us to buy the dips on Corsair stock. I think we're going to get to a point where this stock really breaks through the $34 resistance level on the charts, heads into that kind of a territory, and then you'll be looking back happy that you started picking up in these levels. So for me, Corsair from a fundamental perspective, great stock. If you look at the metrics, still a great stock, and we'll just have to wait for the eagerly awaited readings on the 2nd of November. So mark your diaries, and we'll see how they've progressed. There's my view on Corsair, guys. If you like my perspective, then please don't forget to hit the like button and subscribe, and I'll see you in the next one.